All right, get ready. We've got a whole stack of Estee Lauder financial reports. 10Ks, 10Qs, all that good stuff. And we're about to go on a deep dive into those numbers.
Yeah, and the interesting thing is we're looking at the 2023 and 2024 reports together, like side by side.
Right,
Yeah.
that's right. So we can really see how this beauty giant is navigating, the current world and all the changes happening.
That's like peeking behind the curtain.
Exactly,
Yep.
like a backstage pass.
Mhm.
And trust me, Estee Lauder isn't just about the lipsticks and foundations you see at the makeup counter.
Oh, no, definitely not.
This company has a whole empire of brands,
Whole universe. Yeah.
some of which, let me tell you, might really surprise you.
Oh, for sure. Some unexpected names in there.
So come on, spell it. Which brands are we talking about?
Well, you got the classics, the big names like Estee Lauder itself, Clinique, MAC, all
Yes,
those.
the iconic
But
ones.
then they've also been on this acquisition spree, picking up brands you might not expect.
Okay, I'm all ears.
So, like, one of them is Decium.
Uh,
It's the parent company of The Ordinary.
Oh, The Ordinary. That's like the darling of skincare right now.
Right. If you're into skincare, you've definitely heard of them.
The products are so simple and effective.
And affordable. That's a big part of their appeal.
Absolutely. The Ordinary is like the cool kid on the block.
Yeah, they've got that cool factor for sure.
So I can definitely see why Estee Lauder would want to bring them into the family.
Oh, yeah, it was a smart move. They spent $1,092 million to acquire Deciem. Can you believe that?
Wow. That's a lot of faith in The Ordinary.
But that's not all. They also shelled out a massive $2,578 million for Tom Ford.
Tom Ford,
Yeah.
the luxury fashion
The
house.
one and only. Fragrances, clothes, the whole shebang.
Wow, that is a power move. So it seems like Estee Lauder is really trying to cover every corner of the beauty market.
They're going for it, from those budget-friendly skincare options with The Ordinary to the high-end luxury of Tom Ford.
So what's the thinking behind all these acquisitions? Like what's the grand plan?
Well, one big takeaway is that they're all about diversification. These acquisitions let them reach all sorts of different customers, right?
Right, different ages, different budgets, different styles.
Exactly. Think about it. The Ordinary attracts a younger, more budget-conscious crowd, while Tom Ford brings in the luxury fashion lovers.
Yeah, it's like they're building this beauty empire with something for everyone.
It's a brilliant strategy, and it's not just about owning the brands. They have to make sure those brands actually thrive.
Right, keep them growing and successful. That's a whole other challenge.
Absolutely. And that actually brings us to another key insight. Estee Lauder's global reach. Believe it or not, the majority of their sales actually come from outside the US.
Whoa, really? I had no idea. I would have thought the U.S. would be their biggest market.
It's a truly global business. They're everywhere.
So that means they're dealing with all sorts of different markets and
Oh,
challenges.
absolutely. And one of those challenges lately has been their Asia travel retail business.
Yeah, I bet that took a hit with everything that's been going on.
Big time. Think about it. The pandemic recovery, travel patterns changing, it's all had a huge impact.
Not to mention all the new duty-free regulations and
Oh,
stuff.
absolutely. Like in Korea, for example, those new rules have really shaken things up.
Yeah, it's a lot to keep up with.
It's a constant game of adjustments, for
Yeah.
sure.
So we've got brand diversification, we've got this global reach. What other big themes are jumping out from these reports?
Well, one that's impossible to ignore is currency fluctuations. The dollar going up and down against other currencies.
Right, makes sense with a global company like this.
It can have a huge impact on their bottom line. These exchange rates are constantly shifting, so it's like trying to hit a moving target.
Yeah, it's tough to predict and plan for those swings.
Exactly. And that's why it's so important to look at those reports carefully, because they present the data in two ways. One with the currency fluctuations factored in, and one without.
Oh, interesting. So you can see the difference those currency swings make.
Exactly. They call it constant currency information. And it helps you see how the business is really doing, regardless of those ups and downs in the money market.
Okay, so we're starting to see the bigger picture here, all the forces at play. But what about the bottom line? Like, what are these reports telling us about Estee Lauder's actual financial performance?
All right, well, let's get down to brass tacks. When we look at key metrics like operating income and margin, we see some dips, some noticeable decreases in both 2023 and 2024.
Hmm, decreases, huh? That doesn't sound so good.
Yeah, it's something to pay attention to for sure. And these dips are particularly pronounced in skincare, which is, a core part of their business.
Skincare, huh? Interesting. So is it just that they're selling fewer moisturizers and serums, or is there more to it?
Well, it's a little more complicated than that. There are a few things going on. It's a bit of a mix, actually. Some of it, yeah, it's lower sales for some of their big names like Estée Lauder itself, La Mer, Clinique, Origins. Those are all taking a bit of a hit.
Hmm. So is it just those specific brands? Or, like, is skincare as a whole kind of struggling?
It seems to be hitting skincare harder than some other categories, which is interesting.
Interesting, yeah.
But then on top of that, you got to think about the rising cost of goods sold.
Yeah?
Everything's getting more expensive.
Right. Ingredients, packaging, all of that.
Exactly. So that eats into those profit margins even more.
Yeah, that old saying, a dollar doesn't go as far as it used to, right?
Exactly. And remember, these reports are covering a time when inflation was a real concern,
Oh, yeah, for sure. Those economic headwinds, they definitely play a role.
for sure. And then there's the impact of those acquisitions we talked about. Remember those stock options related to Decium deal?
Oh, right, right.
Well, those have also had an effect on the bottom line.
So even though those acquisitions might be good strategically, in the long run, they're kind of causing some ripples in the short term.
Exactly, precisely.
Right.
But it's not all bad news. The reports also show that Estee Lauder is taking action, trying to adapt.
Okay, good. So they're not just sitting back and watching those profit margins shrink.
No, no, they've started some restructuring efforts, trying to streamline things, become more efficient.
So what are they doing specifically? Like, what kind of changes are we talking about?
Well, they're looking at optimizing their marketing and global functions, which makes sense when you have a portfolio as huge as theirs.
Right. When you've got that many brands and you're operating all over the world, you got to be lean and mean.
Exactly. But even with all that restructuring, they're still operating in a super competitive landscape.
Oh, absolutely. The beauty industry is tough.
Cutthroat. And these reports highlight some of those pressure points. Like one thing that really jumps out is their reliance on a limited number of suppliers for some of their products.
Hmm. That sounds a little risky. Like, what happens if one of those suppliers has a problem?
It could create a real bottleneck, yeah.
Yeah.
And then, of course, there's the constant battle for shelf space and consumer attention, right? They're going up against tons of other brands.
Right. So brand recognition is huge. Product quality, pricing, all of that matters.
Absolutely. Sustainability, too. That's becoming more and more important.
Yeah, for sure. There's a lot to juggle. And then on top of all that, the reports also mention some emerging risks and opportunities, some things to keep an eye on.
Right, right. Like some pretty big ones, actually.
Okay, let's dive into those. What are we talking about?
Well, cybersecurity is a big one. Remember that incident they had back in 2023?
Oh, right, yeah.
It really highlights how vulnerable even these big companies can be to cyber
It's
attacks.
a good reminder that protecting data, both for the company and for customers,
Hmm.
is absolutely crucial these days.
Oh, absolutely. It's an ongoing battle. And Estee Lauder, they're really committed to strengthening their systems. It's a top priority.
Yeah, it has to be. And then, of course, there's the whole geopolitical landscape, right?
Mm.
We're talking about a global business operating in a world with a lot of uncertainty.
Right. And those reports, they acknowledge that, things like political instability, conflicts, those can have a real impact.
Yeah, disruptions to supply chains, changes in consumer spending. It's a lot to navigate.
Absolutely. It's a complex world out there. And then, of course, there's the big one that's been on everyone's mind, inflation.
Oh, yeah,
Yeah.
inflation, that's been a big headache for everyone.
For sure, rising costs are a major pressure point for businesses everywhere, and Estee Lauder is no exception.
So what are they doing to deal with that?
Well, they're looking at different strategies,
Yeah.
including potential price increases.
Right, but that's a tricky one, right? Raise prices too much and you could scare away customers.
It's a delicate balancing act for sure. They got to find that sweet spot where they can protect their margins without pricing themselves out of the market.
Okay, so we've got a lot going on here. Brand diversification, global reach, those pressure points on profit margins, cybersecurity, geopolitics, inflation. It's a lot to wrap our heads around. But before we move on, I'm curious about something you mentioned earlier, about those reports with and without currency fluctuations. Can you walk me through that a little more?
Oh, yeah, sure. So imagine you're comparing sales figures from two different countries, right? And one country's currency has weakened against the dollar, while the other's has strengthened. If you just look at the raw numbers, it might look like one region is doing way better than the other, but
But that might not be the whole story, right?
exactly. That's where the constant currency information comes in. It's basically stripping out those currency fluctuations so you can see how the business is performing underneath all that, regardless of those exchange rate swings.
Okay, so it's like comparing apples to apples rather than apples to oranges.
Precisely. It helps you see the real signal, not just the noise. Now, let's talk about the financial statements themselves. I gotta admit, sometimes those numbers make my head spin. Can you help break it down for me?
Oh, yeah, I'm with you on that. Numbers aren't my strong suit.
Well, let's start with the income statement. One of the first things that jumps out is how they break down their operating results by region. Remember we talked about Estee Lauder's global reach?
Right. They're all over the place.
This is where it gets really interesting because we can see how each region is performing.
Okay, so let's see how those different parts of the world are stacking up.
All right, so for the year ended June 30, 2024, the Americas region, get this, they actually reported an operating loss.
A loss. Wow, that's surprising considering they're based in the U.S. What happened there?
It was a tough year for them in that region. If we look back at 2023, they had a positive operating income, but 2024, yeah, things took a downturn.
So it seems like those profit pressures we talked about, they're hitting them even on their home turf.
Yeah, it's not just a global issue, it's affecting them here too. Now, in contrast, Europe, the Middle East, and Africa, they're doing pretty well. Their operating income is significantly higher than the Americas.
Interesting. So they're kind of carrying the weight, making up for those losses in the Americas.
You could say that. And then there's Asia Pacific. They're somewhere in between. They had decent operating income, but it was down compared to the previous year.
So it's a mixed bag globally, with some bright spots in some areas that are struggling.
Exactly. It really shows you how important it is to look at those reports on a regional level, not just focus on the overall picture.
Right, because each market has its own unique dynamics.
Absolutely. It's all about understanding the nuances. Now, let's move beyond just the regions and look at some other interesting line items on the income statement.
Okay, lead the way. I'm ready to learn more.
All right, so there's this line item called other income net, and this is where things can get kind of interesting because sometimes you find some unexpected details there. Remember that big gain they reported back in 2021 when they increased their stake in Decim?
Oh yeah, the move that eventually led to them fully acquiring The Ordinary.
Exactly. Well, that gain, a whopping $848 million, dollars, it showed up in this other income net section.
So it wasn't directly related to their core business operations, but it still had a big impact on their overall profitability that year.
Right, it's like a financial bonus round, almost. It's a good reminder that these reports can reveal events and transactions that go beyond the day-to-day business. It's all part of the story.
I like that, the financial bonus round. Okay, so we've explored the income statement. What about the balance sheet? What key insights can we glean from that?
One of the biggest things that jumps out is the impact of their acquisitions on their debt levels. Remember how much they spent on Deciem and Tom Ford?
Oh yeah, those are some big price tags.
Well, those purchases, along with general business operations and financing activities, have led to a pretty significant increase in their long-term debt.
And more debt means more interest payments. Right, we saw how that played out on the income statement.
You got it. It's all connected like a financial domino effect. Now, there's this section on the balance sheet that sometimes raises eyebrows. Redeemable non-controlling interest. It sounds complicated, but it's actually pretty straightforward.
Okay, help me out here. What's the story behind that line item?
So basically, it represents the portion of Deciem that Estee Lauder didn't initially own outright, but they had the option to buy later. They gradually increased their ownership over time.
So they had a buy now button for the rest of the company.
Exactly. And they did end up exercising that option. In the 2024 report, that redeemable non-controlling interest line, it's gone. They now fully own Deciem.
So they were clearly confident in Destiny's potential, enough to go all in. Okay, now let's move on to cash flow. What are those statements telling us?
One of the key things to notice is the impact of those restructuring efforts we talked about earlier. Remember how they're streamlining their marketing and global
All
functions?
right, trying to become more efficient.
Well, those efforts, they involve some costs, things like asset write-offs, employee severance, lease termination fees, stuff like that.
So even though those moves might be good for the business in the long run, they come with some upfront expenses.
Exactly. And those costs, they show up in the cash flow statements, specifically under cash flows from operating activities.
So it's important to look beyond just net income and consider those cash flow implications of their decisions, right?
Yeah.
It's about understanding the whole picture.
Precisely. And another interesting detail is the impact of stock-based compensation on their cash flow. You know how companies grant stock options or other equity-based awards to employees?
Yeah, I've heard of that.
Well, that can affect their cash flow when those options are exercised or the awards vest, either because they're issuing new shares or paying out cash.
Right, makes sense.
And Estee Lauder, they have a significant amount of stock-based compensation, so it's something to factor in when you're analyzing their cash flow. It's all part of understanding their financial health. Now, remember, We've been focusing on the consolidated financial statements, which give us a good overview of the entire company. But there's a whole lot more information hiding in the notes to these
Oh,
statements.
yeah, the note. Those are like the fine print, right?
Exactly. And sometimes the fine print is where the really juicy details are hiding.
Okay, I'm intrigued. What kind of nuggets can we find in those notes?
Well, for example, they give us more details about how they account for those big acquisitions. We're talking specifics about the process they use to determine whether a transaction is treated as a business combination or an asset acquisition.
And I'm guessing those different classifications have different tax implications, right?
They do. And the notes also explain how they value those intangible assets, like trademarks, which is super important for a brand-driven company like Estée Lauder, right? It's all about that brand recognition and
It's
reputation.
like trying to put a price tag on glamour and prestige.
Exactly. And the notes also get into their revenue recognition policies, which are crucial for understanding how they book their sales.
Mm.
Remember how we talked about their loyalty programs and those promotional offers?
Yep, yeah.
Well, the notes explain how they recognize revenue from those programs, taking into account things like estimated breakage rates for gift cards and loyalty
So
points.
they're not just booking those sales all at once, they're spreading it out over time.
Precisely. It's a more nuanced approach that reflects how their business actually works. And you mentioned legal proceedings earlier, right?
Right, right.
Well, the notes also shed some light on those. They disclose any ongoing litigation or legal matters that could potentially impact their financial situation.
So, like, what kind of legal stuff are they dealing with?
Well, right now they've got some securities class action and derivative matters going on, as well as some cosmetic talc powder
Oh,
matters.
wow, I hadn't heard about those.
Yeah, they're in there. And while they don't believe these cases will have a major negative effect on their business, it's still something investors need to be aware of. Transparency is key.
Absolutely. It's all about understanding the risks, even if they seem small. Now, these reports also touch on their executive compensation structure, right?
Right. While the really detailed stuff is in separate proxy statements, the notes give you some high-level info about how they determine executive pay, things like performance targets and stock ownership guidelines. It's a little glimpse into how they motivate their leadership team.
Interesting. So it's all about connecting the dots between financial performance, how the company is run, and how they reward their top people.
Exactly. It's all part of the bigger picture. Okay, so we've covered a lot of ground here, from regional breakdowns to the nitty-gritty details in the notes.
It's been a whirlwind tour of Estee Lauder's finances.
But before we wrap things up, I want to circle back to those risks and opportunities we talked about earlier. Those are some pretty significant
Oh,
factors.
yeah, for sure. Those things can have a real impact on the company's future.
Absolutely. And the reports really emphasize how things like cybersecurity, geopolitical events, and inflation, they can all affect their business in different ways. For example, geopolitical instability that can disrupt their supply chains, which are pretty complex and global.
And inflation, well, that just adds fuel to the fire, squeezing those profit margins even more, putting pressure on their pricing strategies.
It's a lot to manage, for sure. But it's not all doom and gloom. These reports also highlight some exciting opportunities for Estee Lauder.
Oh, good. I was hoping there'd be some good news in there. What kind of opportunities are we talking about?
Well, one area they're really focused on is the continued growth of their online presence.
Makes sense. E-commerce is booming these days, and they already have a strong digital footprint with brands like The Ordinary.
Exactly. And they're not just focused on selling products online, they're also investing in some pretty sophisticated data analytics, to create those personalized experiences for their customers.
Oh, interesting. So they're using data to understand their customers better and tailor their offerings to individual needs and preferences.
Exactly. It's a smart move, and it could be a major advantage for them in a market that's only getting more competitive.
Yeah, it's all about staying ahead of the curve. So they're not just reacting to challenges, they're actively looking for ways to innovate and grow.
Exactly. And that's what makes these reports so fascinating. They give you a glimpse into not just where a company has been, but where they're headed.
It's like a roadmap to the future of the beauty industry.
Now, there's one more thing I want to touch on. The Lauder family's continued control of the company. Remember how we talked about their significant influence on business decisions?
Yes, their voting power is pretty substantial.
It is. And the reports actually provide some interesting details about how that voting power affects certain corporate actions. For example, any major asset disposal or merger, that would require a supermajority vote from the other shareholders, excluding the Lauder family.
Oh, interesting. So it's like a safeguard to make sure any big changes to the business have broad support. not just the family's approval.
Exactly. It's a unique governance structure, one that reflects the company's history and the Lauder family's legacy.
It's fascinating to see how that plays out. All right, so we've covered a ton of ground here. What are your final thoughts on Estee Lauder's financial performance based on all these reports?
Well, for me, it's a story of resilience and adaptation. They're facing some real headwinds, no doubt, but they're also making strategic moves to navigate those challenges and grab those opportunities.
I agree. It's a fast-paced industry, and they're definitely not standing still. They're evolving, they're changing.
And that's why it's so important for anyone who's interested in this industry to stay informed. These reports are packed with information that can help you understand not just Estee Lauder, but the whole beauty industry as a whole.
Couldn't have said it better myself.
Yeah.
Now, in the final part of our deep dive, I want to get into some specifics from those notes to the financial statements.
Yeah.
Those little details that really bring the story to life. Okay, so we're back, ready for the final part of our Estee Lauder deep dive. I'm really excited to dig into those notes to the financial statements. They always seem to have, like, the hidden gems, those little details that really make things click.
You got it. The notes are where the real story comes out, all the juicy bits.
Okay, so let's start with their acquisition of Tom Fordley. We talked about that massive price tag, but what can the notes tell us about, like, how that deal actually went down?
Well, one thing that jumps out right away is that they handled it as an asset acquisition, not a business combination.
Interesting. So what's the difference?
Basically, it means they were really after that Tom Ford trademark, the brand name itself, not so much the whole operational side of things.
So it was all about snagging that iconic brand.
Yeah, it was a brand play. And that trademark, get this, it was valued at a whopping $2,578 million. They used something called the relief from royalty method.
Relief from royalty. Okay, I'm going to need you to break that down for me.
Sure, so it's like, imagine they didn't own the brand, right? They'd have to pay royalties to use it. This method calculates how much those royalties would be and uses that to figure out how much the brand is worth.
Ah, so it's like they're saying, okay, how much would it cost us to not own this brand? And then that's part of what they pay.
Exactly. It's a way to put a price on that intangible value, that brand recognition.
Okay, that makes sense. Now, the notes also mention that the Tom Ford acquisition involved some existing license agreements. What happened to those?
Yeah, so those were either modified, terminated, or they renegotiated them.
So basically, they were cleaning house, making sure they had full control over the brand.
Right, they wanted a clean slate, so to speak. Okay, let's talk about goodwill and intangible assets for a sec. Those are some pretty big numbers on the balance sheet, right?
Yeah, huge numbers. And for a company like Estee Lauder, so much of their value is tied up in their brands, their reputation.
You got it. So the notes actually tell us how Estee Lauder checks those assets for impairment, meaning if their value has gone down.
Right, because if their brands lose value, that's a big hit for them.
Exactly. And they have a whole process for testing those assets at least once a year. They look at things like changes in the market, competition, even how well the brand is performing.
So they're not just assuming everything will stay valuable forever. They're actively keeping an eye on things.
They're on it. And they even explain how they figure out the fair value of those assets, which is a key part of that whole impairment testing thing.
Wow, these notes really are like a behind-the-scenes look at their financial decision-making. It's pretty
Yeah.
cool.
It is. Now, let's switch gears and talk about revenue recognition for a bit. The notes give us some insights into how they handle revenue from those loyalty programs, gift cards, all those promotional offers they have.
Yeah, all those tempting deals. I always wonder how they account for that stuff.
Right. So remember we talked about how they spread out that revenue recognition over time instead of just booking it all at once?
Yeah, it's like a more gradual approach.
Exactly. And the notes explain how they use things like estimated breakage rates. Like with gift cards, they figure out how many people probably won't actually redeem them and adjust their revenue accordingly.
So they're not being overly optimistic. They're taking a more realistic view of things.
Precisely. It's a more conservative approach that reflects how people actually behave.
Makes sense.
Yeah.
And they also cover how they handle those product returns and sales incentives, right? All those things that are super common in retail.
Oh, yeah, absolutely. It's all about giving investors a clear picture of their finances, warts and all.
Now, what about those pension and post-retirement benefit plans? Those seem like pretty big obligations for a company with a lot of employees like Estee Lauder.
They are. And the notes actually break down the funded status of those plans, all the assumptions they use to calculate their obligations, even their investment strategy for those pension plan assets.
Wow, so investors can really see how those plans are being managed, what the risks are, all that good stuff.
Yup, it's all about transparency. Now, we can't forget about those legal proceedings we talked about earlier. The notes give us more details on those cases, too.
Right, the securities class action lawsuits, the cosmetic talc powder stuff, all that.
Yeah, those are all in there. The notes provide more context, more details, and what the potential impact might be.
So it's like we're getting the full picture, not just the highlights.
Exactly. Okay, so we've gone through asset acquisitions, revenue recognition, legal proceedings, we even touched on pensions. What are your big takeaways from all this?
Well, honestly, I'm amazed by how much detail they provide in these notes. It really shows how complicated it is to run a global company like this, all the moving parts.
Absolutely. It's like peeling back the layers of an onion, right? The more you dig, the more you discover.
It's been a fascinating journey.
It has. And for anyone who really wants to understand Estée Lauder, these notes are a must-read.
Well said. So that wraps up our deep dive into Estée Lauder's financial world. We covered a lot of ground, their brand portfolio, their global reach, those profit pressures, cybersecurity, geopolitical risks, inflation, the whole shebang.
We really got into the weeds.
We did. And we even unearthed some hidden treasures in those notes to the financial statements.
Those are always full of surprises.
They are. But what really stands out to me is Estée Lauder's commitment to innovation. They're not just sitting back, they're constantly pushing forward, finding new ways to grow and adapt.
Absolutely. They're embracing those opportunities, whether it's through acquisitions, e-commerce, or using data to create those personalized experiences.
It's like they're blending their rich history with a forward-looking mindset, which is a pretty powerful combination.
It is. That ability to adapt is going to be key to their success in this ever-changing industry.
Well said. Now, we want to hear from you, our amazing listeners. What aspects of Estée Lauder's business are you most curious about? Let us know in the comments, and maybe that will spark our next deep dive. Thanks for joining us.